Right. Are you struggling to identify the right company shares to invest in? Do you understand the language of numbers presented in any set of company accounts that we have looked at? Well, I'll take a few minutes to talk through the best ways to make the right analysis. In this series, I'll unlock the value of financial information and any tools that can take us there. Hello, investors. Thank you for tuning in. I'm going to talk through what you need to look out for in any set of published accounts before you can make that decision to invest your money in those company shares. By the way, I'm currently looking to invest in the UK stock market, and I just thought I could share the strategy and analysis that I'm currently applying. I hope you gain some valuable insights into company accounts and apply the same techniques in your own assessments. Please note that this is not financial advice, and feel free to comment, like, and also subscribe for more. Okay, so are you ready to invest more wisely? Here's the fact: all sets of accounts that you have seen are communicating something, and you need to interpret the language of those numbers in order to make more informed decisions. I'll talk through the following aspects which I have used to assess the financial health of my potential investees. I'm going to categorize my analysis as follows. I'll start off with the financial performance measures, then we'll talk through the non-financial performance measures, other performance indicators such as ratios. I'll also touch on independent auditors' reports, and finally, some aspects of management, reputation, and competencies. So let's dive straight into it. Right, so let's start with the financial measures. These are the most critical and commonly used, but need not be considered in isolation. Here we are trying to predict the future performance by critically analyzing the past performances. Okay, so what really are financial statements? Okay, so these are management assertions about the financial affairs of the company, which are presented in the form of income statement, statement of cash flows, statement of changes in equity, statement of financial position, which is also known as the balance sheet. One thing to note here is that all company accounts are prepared using the generally accepted accounting principles, or IFRS, the International Financial Reporting Standards, which means they are comparable with other companies, sectors, and even across jurisdictions. In other words, any set of accounts can be compared with prior periods, other companies operating in the same industry, industry averages, and any budgets or forecasts. I've used a practical example to illustrate this, and please check out the link to this video in the comment section below. Financial measures can also include ratio analysis, and there are broad categories of ratios which can be explored, ranging from profitability ratios, liquidity ratios, gearing, working capital ratios, and of course, investor ratios. I'll talk through the investor ratios in a bit. Okay, so we'll talk about the non-financial indicators. These relate to the qualitative aspects of the company and they have a bearing on its reputation. For example, environmental and social responsibility activities, which are reported as part of the accounts. A company which has a good track record of social responsibility is likely to be perceived to have better future prospects. You can also look at what you know about the company's products, customer satisfaction, innovation drive, and general competitiveness, as these factors obviously impact the company's future. Right, so we now talk about shareholder ratios, also known as investor ratios. As I indicated earlier, investor ratios fall under a broad category of ratios. I will refer you to my upcoming video on key performance indicators for investors. So please subscribe so that you get notified once it has been uploaded. However, the two most important ratios to note are the price earnings ratio and the dividend yield ratio, because these both have regard to the current share market price of the company. They can be compared with other ratios of other companies in the same sector or other companies generally. There is no need for you to understand the calculations and the formulas, but knowing that a higher price earnings ratio indicates strong investor confidence in the company and its future. Future should be enough. Okay. So dividend yield, this is also a return that a shareholder is currently expecting on the shares of the company. An investor is interested in both dividend yield and capital growth. And obviously, dividend yield is therefore an important aspect of a company's share performance. Of earnings per share growth is a good measure of management stewardship. You will find out that some management incentives are linked to earnings per share growth. However, there is a danger that management may manipulate results in their favor, and you will soon find out the crucial role of external auditors in a bit. So the next item will be audit. So basically, auditors act on behalf of investors and stakeholders at large to ensure that the accounts produced by the entity are free from material misstatements and bias. The auditors also check the accounts to ensure that they've been prepared in line with the generally accepted accounting practice, normally referred to as GAAP, as I indicated earlier on, for comparability reasons, of course. Companies may sometimes be tempted to do what is called creative accounting or engage into something called fraudulent financial reporting, which is deliberately misapplying rules just to strengthen their financial positions at the end of any financial period. Right, so as an example, maybe major assets may be acquired at the end of a financial period just to distort results in a certain way. So for this reason, among others, company accounts must go through a review and scrutiny by an external auditor in order to provide some reasonable assurance that the accounts are free from such bias. But of course, as both current and potential investors, we are more interested in the audit outcome. What is a favorable audit outcome? Well, the auditor will give an opinion at the end of the audit, and a clean opinion must be an unmodified one, which means the auditor is reasonably satisfied that the accounts give a true and fair view of the company's financial status. So I think basically this is what you need to know. That's all you need to know about audit reports and the audit process of company accounts. The rest will be just technical stuff, which is too much. We don't need that. Okay, so moving on. You must know that management may be required to present their views of the company's performance, financial position, and progress. Here they will reflect on the nature of the business, some strategies being pursued, any challenges, and any regulatory environmental issues. They also state the risks being faced by the business and any significant contracts, resources committed or applied. Sometimes you find the above information under the chairman's statement heading as part of the accounts. It is also important to look into the competencies and integrity of management. You need to perform a general search on management profiles and any public information that you can find. Okay, in conclusion, it is important to understand both qualitative and non-qualitative aspects of a company's performance. And I should emphasize this. Make sure you clearly document your analysis, including the 5 points discussed of the different companies that you are considering. I've designed a template that you can use for this purpose. If you are interested, comment, share, and I can share it with you. There's also technical analysis, of course, to consider, but I will cover that in a separate session. Okay, so that's a wrap, guys. Thank you for watching. And if you've got any questions, please ask in the comment section and I can gladly assist you. Subscribe to keep watching out for more supporting videos. Till next time, cheers for now. All the best.